As we can see, gold just delivered a big discount. So as mentioned in the previous analysis in yesterday's video, big institutions or big players that at least can move some wicks or create this type of institutional wicks are pushing prices to the lowest they can so they can buy cheaper, because this doesn't change the narrative that fundamentals shows that gold is bullish and mainly dollar is the one that is weak. And with the rates decision staying the same this week, the narrative doesn't change. This is just a retracement, and as I've been updating, technicals claim or scream for this retracement that we'll be seeing, that it's a very huge discount, and it's been almost retesting the second area that I shared yesterday. Pretty much we kiss and fly the 3000 area, but you can see here the precision of this inefficiency created first after the major breakout of the range that we had in the previous all-time high that was around 3000. These 2 weeks might not be in every broker, but all these zones or all these candles are printed in every broker, so you can consider 3000 or 2998 as the kiss and fly zone. But after that you can see huge pressure to the downside. Here we create the inefficiency, we retest 2 times, and after the third touch, price created a new all-time high, so we left a lot of liquidity here that was retested after the big push to the upside. We didn't print a new all-time high, so here we see exhaustion in the market. Then we have the another retracement. This big candle shows tons of indecision. Mainly we're waiting for data at that point. So as you can see, that indecision was created with the FOM, but also we need to understand the FOM press conference is very important because Powell gives a lot of hints to the future. In this occasion, and like it's usual for him, tends to say something and in the next statement he like kind of contradicts or leaves everything the same, like with the question of what's going to happen. But for now, the rumors or the projections that we will have at least 2 rate cuts this year are growing to 3 cuts. So that's what the market is pricing in, the possibility of a new rate cut soon in this year. So pretty much try to think as an investor or someone that has a lot of money. You don't want to buy in the all-time highs area. So as you can see, we retest, we take some liquidity, we got to this area that was also acting as a big resistance for some points, because here you can see that we don't have a close to the upside. This is the 2 hour, so we go to the 4 hour, this is not even a close in above this area. So this was creating huge resistance. We needed this big wick to push to the new all-time high, and then we pretty much revalued very fast, pretty much in the same week. So then we retested again this low, we retested the resistance, and once you see that the rejection was created, this was very important to note it, because we will have this big institutional wick that pretty much blasted the entire area that we had marked as first area for buy-ins. So this was the main reason that I was telling you yesterday. Try to position yourself big or not that adjusted with the margin or with the stop loss, because the move could be huge. So if you manage to position yourself smart, here you will be making money because you will be layering. There's no need to try to guess the market, just flow with the market. As you can see, we kiss and fly the area. It was a $57 move to the downside, that it's very big, and we already recovered at least $15. That it's not bad, it's very good. If you manage to average very good this position, you will be out right now and in profit. So that's how traders actually trade. They don't try to sniper entry or have 0% drawdown. That's just your mentor trying to sell you a course. You need to be reactive to what market will do. So if you position yourself at least not very tight or adjusted with your margin, you will be able to get out of the position today in profit. As my results, as you can see, we're making money currently with the trading mode. For the investing model, we are holding those positions yet, because this is a long-term model. I'm not waiting to close these small moves. I rather wait for more pressure to the market. So I'm just layering because I need to give the EA information or enough information, and this is the buy model, so I know I won't have any issue long term, because gold, as always, even if it revaluates to 2000 again, I will be able to hold my margin. We won't have any issues. So for now, price, it's just gonna range because markets are about to close. The last stock will close soon, so no one wants to hold swaps to the Sunday, but the gap will be something huge because people will start buying gold as soon as the market open. So you can expect the reaction to retest the trend 3022 area, and also we have these 2998 and 3000 areas, very heavy magnets, because we only kiss the area, but we left tons of liquidity here left or hanging before or besides the one that is already here. You know, this is a huge liquidity pool, so market will try to get this liquidity. What markets do, or market makers and banks do, is take this liquidity so they can push again to the upside, because they cannot really open one lot or 100 lots like retails. They need to diversify their positions, so they add positions to the move, and then they take stop losses as profits so they can push or reverse the trades they will be selling. And once they reach one point, we will boom to the upside by changing the bias to or the positions to buy. So try to position yourself smart. That's why I'm always telling you, try to mark your charts. As you can see, these two levels were marked at the beginning of the week, and we also updated this zone. And what happened? We kiss and fly every time this zone until we blasted to the next one. So pretty much you were trading nowhere area if you were trying to position yourself here. So try to not do that. And for now, that will be it. Market is about to close as mentioned, so no more action. But next week we will have a lot of hit with the GDP and with the unemployment claims. So we will start with the manufacturing. If we continue with expansion, that will be above 50 in both of manufacturing and services. That will be good for the dollar. So the push to the downside might feel the narrative that they will take liquidity here, but you will need to be patient to the Thursday price action, because if you want to hold long-term a position, you will need to get this data, because it's very relevant. And as you can see, the forecast it's higher than the previous, so markets will react hard based on this data. So try to not get too tight as mentioned, or try not to over leverage if you are planning to hold long term, or at least that whole week. So have a good one for now, G's.